Welcome to this week's Earnings All-Stars. It's an important week. Things are really kicking off, and we're starting with two of the Mag 7 stocks this week, Alphabet and Tesla. Which has the better earnings outlook? Which has the better chart? Which one should you be paying more attention to, or maybe both? Let's dive right in and take a look at these two very important stocks ahead of their earnings reports this week. Okay, the first one we're going to start with is Tesla. And we all know what's going on there. They're a car maker and they're not selling as many cars right now. So that's one key issue. Another key issue everyone's going to be watching, the robotaxi, which has launched now in Austin. Maybe we'll get an update on that and where they're going with that. And also on the robot side, what's happening with the robot side. Now, a lot of things are kind of built into Tesla in the hope category. So scrolling down, we can see the price consensus and surprise chart. We've had two misses in a row. And if you click on the little arrows, you can see the magnitude of these misses. So last quarter was a big miss, 38% miss there on the earnings last quarter. It's missed twice in a row. And then it beat, and then it had this streak of red in here as well, starting way back in 2023. So it's been a rocky time for actual earnings. And then the reason I like this chart for price consensus and surprise is because it overlays the price of consensus on top of the earnings surprises. And I don't think anyone should be surprised given where the auto sales are. And that is their earnings. That is their bread and butter. And you can see the decline here for 2025, 2026, and now 2027. But it is showing some earnings growth off of this low year for the next 2 years, but that's into the future. Now, scrolling down a bit, looking at sales and EPS growth rates chart, I also like to look at this. You can see that it's been struggling a couple of years now on the earnings side, and it has not been able to grow its earnings. 2026, however, like the chart shows, a rebound in earnings up 50%, but we'll see what happens this quarter and where we stand as we get closer to 2026. So a lot of balls in the air here with Tesla. The shares are now trading at 186 times with this PEG of 9.3. It has a price to sales ratio over 10. I think it's at 11 right now. So it's pretty pricey across all valuations, but Tesla has always been a pricey stock on, PE, price to sales ratios, because investors are willing to overlook what's happening right now on the chart with the future. And originally that future was rolling out the EV car itself and then growing that business. And now it seems to be transferred into the robotaxi, self-driving, autonomous vehicles, and even the robots. So we'll see what develops this quarter, but analysts are on the more negative side this quarter. Let's look at the detailed estimates real quick, just to get an idea of where they stand. So yeah, let's look at the quarter over here. 2 are down in the last 7 days, 8 are down in the last 30. We do have one that's up though in the last 7 days. So at least one analyst, revising a little bit higher going into this number. But otherwise, the consensus has fallen a bit here to 40 cents from 43 just 30 days ago. And the full year is down as well. So that's Tesla. It does have the number 4 ranked sell. And now you can see why, because those estimates are being cut in the last week. Going into this number, it's not simply just the older estimates falling off, and that's why we're getting the 4 number sell. It is the analysts being bearish heading into this number. So let's just wait and see, but low expectations now with Tesla, at least on the car revenue and earnings side of things. Okay, then we want to compare it to what's happening with Alphabet. one of the cheapest of the Mag 7 stocks. Does it warrant that? So Alphabet, number 3 stock, as you can see, and just scrolling down, also taking a look at the price consensus and surprise chart. And a little bit different picture here. Very good earnings surprise track record. 9 beats in a row. The last string of red was back in the difficult 2022 when the Fed started raising those rates. Money got more expensive. A lot of the tech companies started laying off employees, but then they righted the ship in early 2023. And look at the earnings and the earnings growth up and to the right, just about every year here. Scrolling down to look at the sales and EPS growth chart, very nice earnings growth. You can see back in 2022, that was where the troubles were. We did have a decline then, but then we are getting the growth. Now, 2026, seeing the 6.3% for next year is on the low side. I'm not sure it's ever done mid-single digit on earnings growth before in its entire history. Well, other than, an occasional negative, but when it's been in the positive, this is pretty low. So does it stay like that? Some of that has to do with worries over what's happening with AI and that the search feature is going to basically be replaced by AI. And what does that mean for its revenue if its powerful search goes away? So a lot of questions with Alphabet right now, almost as much as with Tesla, but it also owns YouTube. And YouTube has been dominant and is now dominating, even off of the television. It's dominating streaming, all forms of video. And it is bringing in a lot of revenue now, especially on those ads. So scrolling down to see what's happening with the estimates going into this number with Alphabet, and we see 2 are higher in the last 7 days. Nobody is cut. So this is very bullish and similar for the full year, except one has cut there in the last 7 days, 2 higher for the full year. And we have 214 now expected versus 212 just 30 days ago for the quarter. So a little bit different picture here than, as I mentioned, than with Tesla. A little more bullish here with Alphabet. We didn't look at the valuations a little bit. Let's see, PE is now 19.3. So that's under the S&P 500, which is now around 24 times. So this is a cheaper stock and one of the cheapest of the Mag 7s now. PEG ratio down here of just 1.3. So it's got earnings growth. It's got a pretty cheap PE side of the picture, which gives us that good PEG ratio. So Alphabet looking pretty good. If you're putting them head to head, and they will be head to head on Thursday this week, I'm putting my bets on Alphabet. In full disclosure, I do own Alphabet in my own portfolio, and I do not own Tesla. But this is going to be the start of the Mag 7. So important reports from both. You don't want to miss them. And all the other companies reporting this week, I have another earnings all-star video to highlight some of them. Some of the great names we're also getting in addition to these 2 names. And so you don't want to miss any of them. Be sure to get us at Zacks.com/YouTube to get all of our earnings all-stars videos. And I'll see you again with 5 more stocks that are reporting this week. Red hot names. You don't want to miss it.